Hello everybody, welcome back to my channel where we talk all things finance and investing. Today's video, I'm going to tackle the question of how many funds somebody like you or I should have in their portfolio. Now, whether that's just a normal general investment account, a tax-free savings account like an ISA in the UK, or self-invested personal pension, 401k, whatever, how many funds should you have? Let's get into it in today's video. So I get this question a lot. How many funds is too many? How many should I have in my account? Thinking about things like diversification and all of this sort of thing. Well, actually, Fidelity in the UK has recently published some data on this in terms of their clients and how many funds they have based on the balance of their accounts. All right, so let's take a look at this chart up here, which Fidelity has used the data from 550,000 clients that they have here in the UK to work out the average fund holdings by portfolio size. And as you can see on the y-axis, we got the number of funds, and on the x-axis, we have the different segments of account balance or portfolio size overall. And again, this was just published, Fidelity International, June 2025. And I was really surprised when I saw this, particularly at the upper end of the scale. If you look at the people who've got 1 million plus, they have over 20 funds in their portfolio. This is crazy to me. I could not believe it when I saw this. But anyways, let's start at the beginning. If you look on the left-hand side, for portfolio values of 100 to 200,000, it's around 7 in total. And as you go up from 200 to 300,000, you're getting above 10 now, 10 funds in this portfolio. And it just starts going up. For each 100,000, you go up in portfolio size until you get to sort of the 5 to 600, 6 to 700, 700 to 800,000. They're kind of plateauing there in and around 17 funds. But of course, like I mentioned a moment ago, it shoots up again when you get to 1 million plus to get above 20. And I think this really is just too many funds. And I'm going to explain why and a few things to think about here on this, okay? Okay, so what is the reason I think that people tend to buy so many funds and put it into their portfolio? I think the reason they do this is, frankly, it's a little bit fun and exciting to be buying into new funds and adding into your portfolio. People just love to do it. And the reason for that is we get hit with messages from the media all the time on new sectors and hot themes and things to be thinking about. And people will watch these videos or read these articles and then decide to actually log into their brokerage account and just buy a fund on the back of that. And sometimes nothing else. They won't do any other further research. So as you can imagine, over time, as the media messages get stronger and change all the time, then of course, you're going to end up, after a few years investing, you're going to end up with 10 or 20 funds like we've seen these people here at Fidelity. So I think that is the main reason for it, but I don't really think it's the way to go, and I'll get into why. Okay, my number one reason why I think this is too many funds is, how are you going to be able to monitor them all? At the end of the day, if you're investing your hard-earned money into a fund, whether that's, any sort of exchange-traded fund or an active fund where you've picked a manager who's going to go out and try and beat the actual stock market by picking the best companies, you need to make sure you're doing enough research to stay on top of what that fund manager is doing with your money. What are they investing in? Are they investing in the types of companies that are aligned with the mandate of the fund, or that what you think they should be investing in, for example? There's a very obvious and unfortunately very negative story that happened with this case, the Woodford equity fund a few years ago, where of course this was billed as an equity income fund, but the fund manager ended up over time buying much smaller companies who didn't even really pay dividends or didn't even have their shares trade very much. So in the end, the fund actually collapsed because investors were pulling the money out so quickly. He wasn't able to sell enough assets to give them their cash back, and it got incredibly messy, and a lot of people lost them a lot of money. The reality is as an investor, you want to make sure at least every quarter you're having a look at what their holdings are, that is the fund manager, and whether or not you're happy with that. Because with Woodford, it was pretty clear that he wasn't investing in the types of companies that his fund was designed to invest in. So you need to make sure you're on top of all your funds and your fund managers, and you just can't do that if you've got, 10, 15, even 20 funds in your portfolio account. It's just impossible to do. All right, the second reason why I think too many funds is a problem, and I think this is probably even the most common one. A lot of your funds are going to be investing in companies that are overlapping in each other. You may buy a tech fund, for example, but then you also may buy a NASDAQ tracker. You may be in the S&P 500, but guess what? The top end of all of those funds almost definitely are the same companies: Apple, Microsoft, Nvidia, Amazon, all the big mega cap tech names. So you may find that most of your 10 funds, for example, are invested in the same thing. So you're not even getting the diversification that you think you're getting by having 10 funds in your portfolio. So if I were you, I would go right now, check the funds that you're invested in and see what overlap that there may be. Some investment platforms even provide you with some tools to help you analyze this so you get a really good idea where your money's invested across all of these different funds. Okay, third reason why I'm not a big fan of having so many funds into your investment portfolio: what about the fees? How are you going to be able to track the different fees, the charging structures, and everything that comes with it if you've got 10 plus funds in your investment account? Fees are a critical part of investment success, and the lower the fees, the better, of course, because it enables you to keep more of your investment portfolio later in life over the long term. So if you've got 10 plus funds in your portfolio, how do you know what is being charged by which fund and everything? It's just too difficult to stay on top of. And it may be that you're paying a lot more money than you should be just by keeping it simple with a few funds only. So what do I think? Well, in all honesty, I think you shouldn't really be invested in any more than 5 funds at the absolute maximum. I don't even think you really need that many. But I get that some people want to try experimenting, trying new things, or they may have a sector that they really like for a particular reason and they'd like to get it invested into that sector themselves. But I think you should limit it at 5 and no more. This will enable you to stay on top of what that fund manager is investing in. Even if it's a passive fund, you want to be aware of what it's investing in, and of course the fees and charges, and getting rid of any overlap so you're actually properly diversified across those 5 funds. So I think you could get by with 1 to 2, say, core global tracker funds. You know, if you're based in the UK, you can think of things like SWDA, that's an ETF that you could look at, or VWRL with Vanguard, which is like a Vanguard World Fund. It even includes emerging markets. So if you just want total diversification across the world, that's one that you could consider. Of course, this is not an investment recommendation, and make sure you read any documents like key information documents or anything before you decide if those are right for you. But you could have a couple of core funds like those two, or even if you're happy to go with just the S&P 500, the 500 largest companies in the US, for example, then VUSA is another one that you could look at as well. But you would have a couple of those, maybe all 3, but you would be running into, again, some overlap by doing so. Now, once you've picked 1 or 2 sort of global equity tracking funds, and if you really want to get some exposure to other things or specific sectors, then why not pick 1 or 2 of your favorites and add them into your portfolio and track that, and most importantly, see how their performance is versus the 1 to 2 core global index tracker funds that you have. I'm willing to bet over a 5 or 10 year period that those specific sector funds actually underperform, or at best meet the same performance as a global tracker or an S&P 500. What you cannot do, however, is add 1 or 2 specific theme funds and then every year change it out, trying to pick the hottest theme for the year, because at the end of the day, you'll be chasing funds, chasing sectors, and you're probably not going to make money on that portion of your portfolio. If you're going to do that, then I suggest you keep that to a very small percentage, like 10% of your overall portfolio, in the 2 funds that you're going to pick and try and outperform the market with. But watch out, in 5 or 10 years, I wouldn't be surprised if at best you've matched your actual core portfolio benchmarks. Of course, once you've got kind of 2, 3, 4 funds that you're happy with in your account, you also want to have a cash component. Now, you can do that through a money market fund. I did a video on a money market fund recently. I'll put a link to that in the description so you can have a look at that. Or just buy a short-dated government bond like a UK gilt that's going to mature within the next 12 months or less. Of course, if you're in the US or Canada, for example, or any other country, you should be able to find a short-dated government bond for your country. That's what Warren Buffett does when he sells stock. He puts the money to short-dated treasury bills, usually going 3, 6, or 9 months out, and then when it matures, he'll either put that money back into a stock if he likes it, otherwise he'll just roll it over and buy another one. In all honesty, I don't think you need to do anything more than that. 2-3 funds at the most, and then add some short-dated government bonds or maybe a money market fund to have a cash component, and you should be good to go. But make sure you're not overlapping, you keep it simple, and you keep the fees low. So that's my video on how many funds you should have in your investment portfolio. I hope you liked the video. If you did, hit the like button. It would really help me grow the channel. Subscribe to my channel if you haven't done so already. I'll keep producing good content like this. And the more subscribers I get, the more kind of encouragement I get to do the videos. So do that. Leave me a comment. Tell me what you think. How many funds do you have in your portfolio? And is it too many? What's your ideal number of funds in your portfolio? If you want to see what's in my portfolio, no problem. I did a video on this earlier in the year, so I'll put a link to that right up here, my one fund portfolio. So click on that. I'll see you over there. And as always, I wish you nothing but the best in your savings and investment journey.